Stonk Insights. This is not financial advice. Today's video, we're going to talk about two of the bigger Bitcoin mining companies, being Marathon Digital, ticker symbol MARA, and Riot Blockchain, ticker symbol RIOT. We're just going to be looking at these companies. I did make a video over a year ago about both of these companies, very rudimentary video. I do encourage you to take a look at it. If you've never heard about any of these companies, I do a company overview. But in this video, we're going to be breaking down these companies a little bit more. By the title of this video, you're probably thinking that I'm going to be picking a winner between these two companies, but I'm going to leave that up to you. Like I said, this is not financial advice, so I can't tell you which one of these companies are better, but we are going to look at the actual numbers, and I'm going to make my own interpretation based off of those numbers. So that's the type of content that you're looking forward to. Hit that like button if you like this video. I would encourage you to stick around to check out my other videos. I talk about stock, I talk about crypto. So if you're interested in those type of topics, hit that subscribe button. Without any further ado, we're going to transition here. We're going to do something a little bit fun, a little bit different. So I'm just taking a 1 year snapshot of both Marathon and Riot and Bitcoin from March 16, 2020 through March 15 of 2021. Now, I'm just taking this snapshot. Obviously, the gains during this time were outstanding for most cryptos and most stocks, just because of all the liquidity that was pumped into the economy. But this just kind of brings things into perspective. People talk about like how outsized the gains were with Bitcoin. So at March 16th, 2020, if you would have invested $1,000 into Bitcoin, you would have had 0.15532 Bitcoin at $6,500. Okay. Marathon, you would have had 2,222 shares at 45 cents. And Riot, you would have had 1,428 shares at 70 cents. Now, we all know about 2020, the turbulence, the pandemic. The market was just in uproar, going all over the place. But it did, catch a foothold and everything started to go up. Fast forward 1 year later, we see that $1,000 investment in Bitcoin, when it was at $6,500, 1 year later, Bitcoin was at $45,000. So, that's huge appreciation. That $1,000 would have turned into $6,989. So that's not too shabby. However, if we look down at Marathon during that same time frame, that $1,000 investment 1 year later would have turned into $106,700 at a share price of $48.02. I mean, you talk about 100x to 10x's in a crypto market. This is 100x in the stock market in a year time. I mean, something that's not normal. You usually don't see these type of games in the stock market. And moving on down, look at Riot Blockchain. That same $1,000 investment, at March 16, 2020, a year later, would have been $86,608 at a share price of $60.65. So this just, kind of illustrates the overwhelming outsized gains that, these two stocks in particular had. There were other stocks that had, outsized gains during that time frame, but these two stocks, in comparison to Bitcoin, which, the whole business model around these stocks or around Bitcoin, in hindsight, these are leveraged plays on Bitcoin. So when things go up, they go up in an outsized manner, and when they go down in an outsized manner. But you can just see, the oversized gains that you could have had, investing into these companies. So I thought that was just interesting to look at. Okay, so that was just the first comparison for you guys. You take from that what you want. Okay, so next we're going to look at, just some general things from both of them. I'm going to be clicking back and forth. So first with Marathon Digital, we see their market cap is at $397 million. We see with Riot, they're at $563 million. So we're looking at the market cap and we're not looking at the share price. The share price can be deceiving because of dilution. So that doesn't necessarily mean that the price went down because the market cap went down. shares should be pumped into the market, and the market cap will stay the same, but you just add on shares will bring down the share price. So that's why we're looking at the market cap. Just with that, we see that Riot, has a bigger market cap. Okay, now we've seen, the range from 2020 to 2021, but we just take the 52-week range for Marathon Digital. We see that it has lows all the way down to $3.11. It's at $3.40 right now. And in the 52-week range, it went all the way up to $33.90. And we see with Riot, it had lows of $3.25. We're at $3.37 right now. And at the 52 range, it had a high of $24.20. Now, one thing that I want to show here is what the market thinks about both of these stocks. So the market thinks that Marathon is overvalued right now. Okay, so you see that down here, you see that they have this overvalued. So I'm going to give my opinion when we look at the balance sheet. Why do I believe that the market believes that Marathon is overvalued? But we see conversely, Riot is exactly the opposite. The market thinks that Riot blockchain is undervalued. So when we look at the balance sheet, which we're going to do next, and this is just a slight compare and contrast. I'm going to go a little bit more to Marathon to see why I believe it's overvalued. This is just the market. This isn't me. This is just the opinion of the market and the sentiment that's out there. Okay, so we're going to start out with Marathon Digital Holdings. So, take this, with a drop of salt. This is from September 30th, 2022. So that's a few months back. These things that I'm about to go over could have changed since then. So first off, what I like to look at is just the total current assets. And again, total current assets are cash equivalents and any other assets that you can unwind and make liquid within a 12-month time frame. So we see that their total current assets right now are at $240 million. $55 million of that are cash and cash equivalents. And then we see $126 million are under this digital currencies, which is going to be primarily the Bitcoin that they mine. So I'm just going to quickly jump over to the Riot blockchain just to compare just the assets portion of it. So we scroll down and we see the total current assets for Riot blockchain at $476 million. So we see they do have an edge there as far as total current assets are concerned. Going back to Marathon Digital, we're going to look at their current liabilities and total liabilities. Okay, it's very important. So looking at their current liabilities, they have $45 million in current liabilities. So that looks great. Okay, we look at the current liabilities to current assets. We see that there's about a 5-to-1 or 4-to-1. So, that is, a good look right now, having that type of difference between current assets and current liabilities. The concerning part about this is when we go down to the total long-term liabilities. Now, long-term liabilities are past 12 months. However, you look at that number, that's $805 million. That is a huge number. So before we go back to Riot blockchain, I just want to, laser focus on that. $731 million of this $805 million long-term liability, it's under this convertible notes section here. So we're just going to break that down a little bit further here. All right, so we're zoomed in a little bit further, and we're not going to go through this whole thing. I pretty much just want to go over this first sentence here. So note 9, debt. On November 18th, 2021, the company issued $650 million principal amount of its 1% convertible senior notes due 2026, the notes. So let me just kind of break just this section down. So they have these convertible notes, obviously, that they use to fuel their operations or whatnot. The principal of that is $650 million. So that's the bulk of the $731 million that we see in the convertible notes section of the balance sheet. They are charged a 1% annual interest rate, which basically means they are paying about $7.3 million on the principal of this loan. To wrap this up, the loan is due in 2026. So in my opinion, there's a few things you can take away from this. One, this isn't doing the 2026. Okay, so that's down the road. Okay, that's still 3 more years down the road. Okay, that's a good thing. 2, they're only being charged, an annual percentage of 1%, so $7.3 million. That could have been a lot worse. So at 1%, hey, we'll take it, and they're being charged that until 2026. All right. Thing about it though is this is, in my opinion, and again, I'm not a financial advisor. This is my opinion. But this is a gamble play. They have to have Bitcoin go to a higher number than where it is right now for them to be able to pay off, such a huge amount of debt. Now, obviously, if you're invested within the Bitcoin miners, you believe in the halving, you believe that something is going to happen June 2024. It's going to be a supply shock, and that in itself is going to cause Bitcoin to rise. That's the hope. But it's not written in stone. No one can guarantee that to happen. And unfortunately, with how this is set up, Marathon is pretty much hoping that this happens. If Bitcoin until 2026 trades sideways, Marathon is going to be in a lot of trouble. So, this is a gamble play, in my opinion. And that is the reason why I believe the market is valuing Marathon as being overvalued. Is because they have all this debt and they are gambling on one specific event for this debt to kind of resolve itself, being a Bitcoin halving and the pump that is supposed to happen afterwards. Now we're going to take a look at Riot blockchain here. So we see that their current liabilities, their total current liabilities are $107 million, and their total liabilities altogether only $154 million. So ponder this, their total liabilities in comparison to their current assets are 4-to-1. So, just looking at those two things, we see Marathon, and Marathon, they had some assets on hand. They had the Bitcoin on hand. The current assets looked healthy, and it looks healthy in comparison to their current liabilities. But when you look at the total liabilities, we see that there's a major hole there that needs to be plugged up. Unfortunately, it's looking like a lot more luck does need to be in play, as opposed to more of a strategic, trying to shrink the balance sheet, trying to get rid of the debt before the halving, so you can have a clean balance sheet and you could, be exposed to all that upside. But that's the video for you guys. Something real quick, I just wanted to quickly look over this balance sheet, the financial statements, give you that little graphic earlier so you can kind of see, the outsized gains this sector has. But what are your thoughts? What do you think, between these two companies? What is the better company for you, Marathon Digital or Riot Blockchain? Are you invested in any of these companies? If you are invested in one and not the other, why so? But whatever your thoughts, leave it in the comments down below. Thank you guys again, and I'll catch you in the next one.